Hey everybody, it's Mike from AMZ Advisers, and today I have with me Isaac Smith and Jason Snyder from Summit eCommerce Advisors, and we're going to be talking about the fundamentals of bookkeeping for Amazon sellers. Hey Isaac, hi Jason, how are you guys doing?
Hey, doing great. Thanks so much for having us. We're really happy to be here.
I'm really excited to have you guys on here. Why don't you tell us a little bit about your company and what your backgrounds are, and how you kind of got into this to the e-commerce and Amazon space.
So Jason and I are co-founders of Summit eCommerce Advisors, and we have a bookkeeping service for e-commerce businesses, which includes Amazon sellers. And of course, we work with people who are selling on other platforms as well. But essentially, we started this business because, well, I was an e-commerce business owner myself for about 6 years. I sold my company last year, and bookkeeping was always a struggle for me. And I think, like a lot of people, either you're always getting behind if you're doing it yourself. Then there's that last minute rush, like, oh no, I got to get ready for taxes. And even when you're working with accountants or bookkeepers, like I was for a few years, there's just something missing, and there's that component of like, I don't really understand what's going on here. I'm getting these reports every month, but what does this mean to me? How can I use this? Is this really just for taxes? And so I, after I sold my e-commerce company, I realized I talked with a whole bunch of people and found out it wasn't just me. There's actually a really big pain out there, and there's needs to be a solution for people who have e-commerce, Amazon, Shopify-based businesses, and to get the information about what's actually going on in your business. And people, that need is there. That people want to talk with someone who knows what they're talking about. And that's what people are missing. So that's really what we do. And we really focus on, like we're going to be talking about today, is what does this all mean to me? Like what are these numbers here for? How do I use them to grow my business?
Yeah, I think that's all super important. I mean, every small business needs to have a good handle on their bookkeeping to really understand what's going on in their business. And if you don't have a financial background, it can really be overwhelming, kind of looking at, your income statement, your balance sheet, trying to figure out what means what and tying it all together. But Jason, what's your background, and how did you work with Isaac to start Summit eCommerce Advisors?
Yeah, so my background, I used to say I'm a lifelong entrepreneur. Got into bookkeeping and finance when I was basically selling financial products to small businesses, SBA loans, equipment leasing, accounts factoring, things like that. And even 25 years ago, businesses still didn't have good books back then either. And so I had to learn how to take care of clients and get their books up to snuff to be able to be underwritten. So got about 25 years of bookkeeping experience, most in freelance and working directly with entrepreneurs and things. Even with my other ventures and other businesses and work, I still had a few freelance clients on the side that needed help that I was always working with. So it's been so far my adult life has been a big part of it.
Awesome.
And Isaac and I met at a in-person networking event. What was it, like 5 years ago or something like that? Or something like
Wow.
that. And I hadn't seen him for a while because I'd been traveling a lot, and he was like, hey, he was kind of explaining some issues he was having with something, and he was asked, and I just started spouting off some things like, oh, I need to talk with you. And that's how it got started with, he had started outlining the problems that he was having with clients and, or his situation, and seeing if we could be a solution. And so that's how we started. I think we officially launched in January, if I remember correctly. So
Awesome. That's great to hear. And it's crazy how far things can go in just 5 years. It doesn't seem that long, but when you look back, you've probably come a long way. When a lot of people think of bookkeeping, they don't really understand why it's important. I mean, they have cash in the bank account, they have cash coming in, they have cash going out, but as long as that cash balance is still positive, that's what's important, right? So why is bookkeeping important in e-commerce, and why do these sellers need bookkeeping?
Essentially, bookkeeping, the problem is you grow your business. Most people get into this business not because they come from a business background or they're trained in accounting or anything like that. Most of us get into this because we want some sort of freedom in our lives. We see, e-commerce, Amazon, this is going to be the solution. And you start your research product, you find a product to sell, you list it, you start selling it. And that's great. That's really, really good. But then as those numbers get bigger, the sales numbers get bigger, your inventory purchases numbers get bigger, they get more regular, you start to have this lump of cash going out, and then later cash coming in, another lump of cash going out, but this time is twice as much because you're selling twice as much. So there comes a point at which most people get rightfully confused about what's going on, so that's one thing. But also when it comes tax time, like everybody has this experience, oh no, taxes are coming out, I got to get this stuff in order. Most people think of bookkeeping as just for the tax man, but we're here to say that it's actually not for taxes. That's not its primary purpose. The primary purpose of having your numbers, knowing your numbers, is so that you can make better decisions that grow your business. So, I mean, just one example, I don't want to get too far into the weeds right this second. We'll get into it later. But for example, if you have 10 SKUs that you're selling, and one of them, the volume sales volume is very high, but your margin is tight. Maybe you're not making a lot of money. Maybe you're breaking even on that. Maybe there's another item that you're not selling so much of in terms of volume, but the margin is much higher. If you don't know these things, you're going to keep just staying on that hamster wheel, just continuing to do the same thing, when just a simple decision of, we should focus less on this item and more on the other item, and our business would dramatically improve. So there are a lot of other little examples like that, but that's really the purpose of your bookkeeping and having good accounting. So really, it's having financial clarity so that you can know what's going on in your business and make better decisions.
Okay. Right. And to add on to that, it's you're looking back and seeing, what was I doing? How was the business doing? I was doing this activity, we added this line, we added this product, and you're able to tie together the activity that you've done as a business to your financials, see what the results are. It's not a binary, but it gives you a really good review of where things are. Accounting is a look back of what you've done, so you can make projections going forward and estimates going forward. And without that, as clear books as possible, it's going to be more and more fuzzy. The more behind you are, the more fuzzy it's going to be. And I'll add one more thing to it. And this just came up with a client in another niche in industry, but they're in the process of selling their business, and they thought, they've got a small loss because of COVID and things. Business is down a little bit, but come to find out, after some research and looking through the books, they weren't recording payroll expenses properly, and they're looking right now at $150,000 loss versus $20,000 because it wasn't recorded properly, and it was because it was all they were waiting to the end of the year to have their CPA reconcile everything, and that's pretty much going to shoot a hole through them being able to sell the business this year. So big mistakes can happen from simple entry errors.
Yeah, I would say that's a pretty big mistake. I can see that definitely affecting their business going forward. So how frequently would you recommend that someone's doing bookkeeping so they're staying on top of all these things and avoiding mistakes like this when they're running their business?
if you're handling yourself, if the entrepreneur, the business owner is handling it themselves, I like to do at least a weekly period on it, even if it's a few transactions, getting that habit ingrained in your behavior and you're looking at it. I prefer Fridays or a Saturday morning, depending on schedules, because it gives you that look back period for the week. What did you accomplish? Again, I made these decisions and I spent money here and I'm seeing, is the result coming or not? If you don't have those regularly timed look back periods of awareness, financial awareness, you're not able to tie the activities that you've done to those money that you spent, and then with the results that you're hoping to achieve from those. So I highly recommend timely. If it's every other week, every week, I wouldn't say a month is probably the bare minimum. I definitely do once a week or every other week to maintain that. And then getting outside people involved if you're not confident in your technical capabilities to set up bookkeeping, having at least somebody set it up for you, and then just looking over it, maybe once a quarter, once a month, whatever that period, depending on your budget. Have some outside people at least get you set straight, because it can cause a lot more pain in the future trying to clean it up. And as I just gave the example of the other business that weren't even posting things correctly, of how big a hole you can dig yourself in, it's about a 7-month period that they did that. So it's getting it set up right the first time is going to save you a lot of money to catch up later, and then potentially catch any issues that you're not aware of as well.
Yeah, it sounds like it definitely can save you a lot of headaches as well. Are there any things in particular that Amazon sellers should be aware of when it comes to bookkeeping, or what do they need to think about when they're doing their bookkeeping and managing their business better by understanding their numbers?
It would be important to look at what you should be looking at as a whole, like what is important in bookkeeping. And so I think for those watching, just an overview of basic bookkeeping fundamentals I think would be useful at this point. And we're assuming, if you have a really good understanding of bookkeeping, this is going to be a review. But if you're like most of us who really just get into this business as the entrepreneur who is just making things happen, and then this stuff comes along later. That was my experience. I didn't know anything about this stuff, but I learned over time. And then I partnered with a pro when we started our company, Jason. So let's go through these reports. So like if you are working with a bookkeeper, they're probably going to be giving you these 3 reports each month. There's 3 traditional reports. And I remember before I had a good understanding of all of this stuff, I would get these reports, I'd look at them and go like, what is this telling me? So let's take a few minutes and go through what these things are and what they can tell you. Jason, do you want to take over? We can hit the P&L, the cash flow, and the balance sheet. By the way, almost everybody exclusively talks about the P&L. Like that's all I hear when people talk about. What's your P&L say? What's your P&L say? We're going to get into inventory and its effect on your business a little bit later, but the really key thing for Amazon sellers is P&L only tells you part of the story. And especially your biggest expense as an Amazon seller is your inventory. Those are huge numbers going out, and those do not even show up on the P&L. So if you're only looking at the P&L, you're going to have an extremely distorted view of what your business is doing. So why don't, since I've given that distortion here, why don't we talk about like what the P&L is, and then what are these other statements that will give you the full picture?
Yeah. So to start with, everybody's familiar with the P&L, profit and loss, or another term is income statement. Those are used interchangeably. There's no difference in technical discussion, that they're interchangeable. Obviously income, your expenses, cost of goods is the big components of it. And like Isaac was saying, it's only part of it. And in this case, a P&L for our Amazon sellers and other e-commerce businesses is going to be your sales, your gross sales, any returns, other types of revenue. If you categorize revenue in different categories like different channel sales or other things, you can kind of break that out. But you're going to have your gross income from there. I advise to, if it's a big component of your business and you want to track it, to break it out into individual accounts. But then again, you need the system to be able to manage it as well. It's not enough just to say, well, I want to track it, and then not build the systems to be able to effectively and accurately track that as well. But again, on the other side, it's too much detail can be very unuseful and actually inhibit, running the business when you're too worried about trying to get everything, tracked properly. So there's a balance between the two. Whatever's going to be useful for you to manage and run your business is what you want to do. So you've got your income, your cost of goods. This is going to be your inventory that has been sold. We'll get into it more in the balance sheet side. But inventory, just because you purchase it, it does not go to cost of goods. It's when you sell the inventory. Once it leaves your possession, even if it's sitting in Amazon's warehouse, it's still, the title is technically still yours. You have the decision to be able to move it. Obviously, there's fees and other things involved if you did that, but it's still legally yours until it is sold to a customer. And that's where your cost of goods would be sold. Sometimes you can incorporate your shipping costs to the warehouse. Other packaging costs can be part of cost of goods. But in most cases, that's going to be the extent of cost of goods for Amazon and e-commerce sellers. And then your expenses, and these are the items that are, just the daily expenses of running your business. These are business-only expenses. There's other things that can be involved in it for tax reasons here in the U.S., like meals and travel and other things that we're allowed to deduct on our tax return. That would be part of it. I recommend to kind of separate things between operating expenses and non-operating expenses. Again, it's a technical detail, but it also can give you a clear picture of what's the, I'll say, extraneous things that are not core to the business expenses. Let's say your education expenses, travel, that's not related directly to business. So you're going to a conference to learn about some software or other things. Those would be non-operating expenses, but they're part of the business, but they're not part of the core operations. So you can kind of break those into two different categories if you like. And then you have your other revenue and other expenses. These are specifically for non-operating. It's just one-time events that you aren't going to be part of your regular business. And that would be things like credit card rewards. If you're buying a lot of inventory or paying for it through a credit card and you get points and things, a lot of times you'll get cash back. That's not regular income. We want to put that down in other income. And the same with other expenses, depreciation or other things that are amortization or non-operating related things would go to other expenses. And so that's kind of a breakdown of the P&L statement of what it looks like. With some other things, you have questions or things that we should add to that?
I think the next thing to talk about is, so that's the P&L. So your P&L is showing you what income you've had this month and what expenses you've had this month, and then bottom line profit. That's what everyone likes to look at, right? So if your inventory doesn't show up there, I think we'll talk about this inventory issue in just a minute. And that's going to lead us into the balance sheet. And so these are the things that when I was just getting started, I didn't really understand this stuff. And I think a lot of the viewers will know, but there may be some that don't know. What we were alluding to is your inventory is not an expense. And so this is a framework, just sort of an understanding that is a mindset shift if you're not used to thinking this way. So a balance sheet is going to tell you what assets and liabilities you have. It'll list all of the assets. So like your bank accounts, how much is in each of those bank accounts, and your liabilities. How much credit card debt, what is the balance of your credit card? That's a liability. Any other liabilities you have. And inventory, it also goes on to this balance sheet. So when you think about inventory is not something that you purchased. It's not an expense like if you bought a computer, or maybe that's not the best example, paper for your office or something. It's not the same kind of an expense. It's not an expense. It's actually, inventory is cash sitting on a warehouse shelf. And so when you purchase inventory, all you're doing is you're moving some numbers on your balance sheet from your asset, from your bank account, and that amount gets put onto the inventory section. And that's important when people are thinking about taxes, because people think, oh, well, I just bought a whole bunch of inventory, I'm going to reduce my tax bill. It's actually not how it works. You only get to count that as an expense when you make that sale. And at that point, it is converted to cost of goods. So that's when it would show up on your P&L as an expense. So of course, as you're listening, you might be thinking, wow, this is getting kind of complicated. Unfortunately, that's true.
Yeah, I mean, exactly. I think it's clear that there's a lot of relationship between these different aspects of the bookkeeping and why it's so important to understand it when you're operating your business. I mean, looking at your P&L is obviously not enough to see how you're doing as a business, but also, what are the issues if you just focus on other aspects of it? Like what if you don't have a good understanding of what is on your balance sheet, or how much inventory you have sitting there, or how much assets in inventory you have sitting there that's not moving?
I'll go back and cover more of the balance sheet, and I'll probably answer that question. So as Isaac was talking about, a big part of it for e-commerce sellers is inventory related, and in fact, that's probably the biggest balance sheet item that you'll see in an e-commerce business is its inventory and where it's carried. And you've got your cash, you've got your inventory. Those are going to be your primary assets, and most of the time your liabilities are going to be either if you owe your supplier and you haven't paid them yet, your payables, and or a credit card or a loan, just depending on how you're financing the business. Most of the time I see e-commerce sellers have some type of credit facility through a credit card or a line of credit or something like that to fund their inventory operations, because it helps smooth out when you get a big spike in orders, or you need to make some other decision. Most of the time the entrepreneur is not fully funding that from their own cash to fund the business. So that's something I see very common. And the balance sheet is simply accumulation of a snapshot of the business at any one point. It's in that error that I spoke about earlier about the company that was misposting their payroll. Essentially what they were doing is, instead of putting the expense onto the P&L, they were putting it to payroll liabilities. And that was seen on the balance sheet. And any accountant will tell you, if you see a messy balance sheet, there's accounting problems with the books of a company, because that's where all the errors end up getting posted. Because people have a good sense a lot of times of their P&L, like, hey, I was making this, or I got this income, or I had this expense, but the other side of the transaction they don't post correctly, and those almost always go to the wrong accounts in the balance sheet. And so that's where we see most of the error. I can tell you the health of a company's accounting just by looking at their balance sheet. I don't have to look at anything else. And if it's good and proper and things are within normal ranges, and especially if I can see detail, I'll be able to tell right away how healthy it is. But
Okay.
for our sellers, it's really managing your inventory. And there's a couple other things that can happen as part of it. if you make a deposit to a supplier, a factory, but they have not shipped your inventory, it is not inventory until they actually ship you or whatever the agreement is with your supplier. So there's more complications as well sometimes of how to handle it. Effectively it does move it from your cash but it's essentially a prepaid expense or prepaid inventory or some other thing like that. It's basically a deposit in order with once they ship it, or you pay the rest of it depending on what your terms are with the supplier. That's how we would want to recognize it. But as Isaac was saying, inventory is essentially cash sitting in a warehouse or in a container or wherever that inventory is at any point. And so a term you'll hear a lot is inventory or churn. It's not in the sense of customers, but how quickly is your inventory turning over? And this is where it's important, as Isaac mentioned earlier, about SKUs and seeing where your sales are going. Because if you've got a SKU that's just sitting on your shelf, that's costing you money, especially if you're leveraging through a credit facility, a loan, a credit card, or something like that. That's money from your pocket that's bleeding out via interest for inventory that's sitting on your shelf. And it actually can make sense financially to take that and sell that off, or this is why you see sales a lot of times, to take that inventory off your balance sheet that's not moving, get it off your balance sheet, convert it to cash, and put it towards some other inventory that is selling, or you have better profit margins and things like that. And so for our Amazon sellers, it's really understanding your SKU sales, what's moving, what's not, and that number will show up in your inventory. And when you're doing your reviews once a month or once a week, you want to look at your balance sheet and say, is my inventory fluctuating high or low, or things like that. So that's the usefulness of a balance sheet for e-commerce. And again, it's not something a lot of accountants seem to talk a lot about with their clients, or the business owners don't pay attention to it as well, just because unless you're really familiar with general ledger software like Books or Xero or something like that, it's not intuitive for them and they don't want to spend time on it because they're looking at the P&L. But that P&L number isn't going to be accurate without an accurate balance sheet as well. So.
Okay. So I think we've covered the P&L now in depth and the balance sheet in depth, but there's a third report which comes in. I believe that's the cash flow statement. How does that fit into everything?
Right. Let me jump in here, and I'll preface what Jason's going to say. So you think about the P&L it will show you your profit, but what business owners very often don't understand, and I didn't understand early on, was that very often we'll look at the P&L each month and go, hey, that looks great. And then you go and you open up your bank account on the website and you go, wait a minute, this is not what I was expecting. And this is where a lot of confusion sets in. And I think at this point, when that happens too many times, that's when the business owner goes, well, screw this bookkeeping report. I'm not going to pay attention to it anymore. I'm just going to run my business and let the bookkeeper, if they've hired a bookkeeping company, or just to keep going it, and I'm not going to pay any attention. That's what happened to me. I know that happens to a lot of people, and that's just the worst response, because then you're essentially just saying, I give up. I'm not going to try to understand what's happening in the business at this point. And there's some pretty basic things that will help you get an understanding of that. Number one, like we talked about, that's looking at the P&L only can get you into trouble. We've talked about the balance sheet. Now let's talk about like where this is the other place where Amazon sellers, other e-commerce sellers get into big trouble, is in cash flow. So this is not exclusive to e-commerce sellers, but every business, the leading cause of business failure is not having cash. And that doesn't always mean profit. That means cash flow. Cash flow, they say cash is king, right? Profit is vanity. No, wait a minute. Revenue is vanity, profit is sanity, cash is king, and cash flow is divine. And it's the cash flow that's going to keep you in business. So when you think, for Amazon sellers, when you think about your rhythm of inventory purchases, that number is always getting larger if your business is growing. And so how do you fund that? And how do you also capture some of that? Because we're not here to work as slaves, right? We want to capture some of the value for ourselves and make a life for ourselves. So this can become very tricky, especially for new business owners who are just starting to see some level of success. I know a lot of people get into that. So really, we talked about how the P&L will give you some idea, the balance sheet will give you another idea, but the question people ask me all the time is, where is my money going? Exactly that. I looked at my P&L, I looked at my bank account, they don't seem to be related. Where's my money going? And that's what the cash flow statement will tell you. So if you think of these three traditional reports are like, let's say there's a car accident out on the corner. You talk to one person, they're going to give you their perspective, like, oh, this car came around the corner, the other one came and smashed into it. Another person will tell you something different. They're talking about the same event, but they're giving you a different perspective on each thing. So if you think like, you know, triangulation, if you're used to that idea, you want 3 points of data and you can find out what really happened. And that's what these 3 traditional reports are. So the cash flow is going to tell you just where did the cash go, how it came in, how it went out, and it'll give you that perspective of like, well, holy crap, no wonder I had 2 inventory purchases this month, and I didn't think about how much cash flow, you know, free cash was left from the previous month. I got myself into trouble. And so when you start to look at all 3 of these reports together, especially the cash flow statement, because remember that the P&L is going to give you a distorted view. But when you start looking especially at the cash flow statement, which I believe is probably the most ignored one of the 3, that will give you a better picture of what's going on. So Jason, do you want to talk about, add to that with that context?
Yeah, so as we were talking about, cash flow statement is where your money's coming from and where it's going to. And it's a look back over a period of time. It can be a month, a year, of beginning balance and ending balance. And you'll have at the top, you'll have your revenue, your expenses, and then you'll say net cash from operating activities. Then you'll have your investing and financing activities. And then you'll have essentially the net balance of what your cash balance was at the end of that period. And this is the important part, is when you're looking at this as an e-commerce seller, is, do I have enough profitability from my operations to fund further inventory purchases and therefore growth if you've got increasing sales? And this is the fundamental question for almost all inventory funded businesses or inventory focused or product focused businesses, is, can I get my product to my market, and what's that time period? And this is another number to look at, is how quickly are you turning that inventory back into cash? Does it take in 2 months, 3 months, 5 months, 2 weeks? These are all important factors in forecasting what your cash needs are going to be if you grow X number of percent in sales. And this is where most failures of e-commerce businesses come from, is this particular thing, is understanding, forecasting their cash. And as Isaac mentioned, it's just every business, but particularly e-commerce businesses, because a lot of them are started, with a founder and not much other capital outside, so there's not a big capital cushion to absorb big spikes or drop-offs in sales. And this is why looking at your cash flow on a regular basis also is important, because you'll be able to see on a regular basis of what your profitability is, and then you can do some forecasting. Okay, if I grow 20%, I'm going to need this much cash. If I grow 40% over this period, I'm going to need this much cash. And knowing your numbers of what your SKU profitability is as well. You know, if one SKU's only got a 10% margin and the second SKU's got 50%, you're going to have to do some kind of a blended forecast of if you sell X number of this or X number of that. It can get really complicated very quickly. And having that look back period of what your cash performance was, is it increasing? Where is it coming from? If you're borrowing all the time, that's telling you something else, because that's telling you you're not profitable to support maintaining your inventory purchases and things. So it's a, you know, like as I said, these three stand together. It's kind of like a three-legged stool. If one's weak, the rest of them won't be as useful, because you can call into question the accuracy of the rest of the reports if one of them is not accurate. So it's from these three reports, once everything's accurate, you can create all your KPIs, all your other things that you want to look at as a business owner, derived from these accurate reports. If you develop KPIs and you've only got a P&L, I can tell you it's pretty much worthless as far as its forecasting ability, because it's not going to be accurate. You're using faulty information to make your estimates, and that's going to be a disaster just by itself.
Okay. So. I think I hear, so when I'm hearing you guys speak about this, and obviously you have such a sound understanding of it, there's two main things that stick out to me when we're talking about how these three reports interconnect and how they tie together. The first one being obviously inventory, and the other being cash. So what types of inventory management recommendations would you make to businesses? How would you recommend that they plan purchasing inventory or determining what SKUs to sell? Or are there certain KPIs that you would recommend to them? How do you help businesses in that way?
Well, I'm a big adherent for the profit first methodology in this regard. So, you know, leveraging is and when I say leveraging, accessing credit to financial institutions, credit cards, and things like that can be part of your expansion and growth, but also setting aside, you know, X number of percent of your net revenue to funding future inventory growth. If you start doing it from the beginning, then and you develop that habit of doing that, you're kind of preceding and setting aside cash for when that time comes in. I know most e-commerce entrepreneurs are in growth mode all the time and looking to try to, you know, grow. But the other side of that is if you're constantly focused on growth, the stability of the business can be put in let's say danger, but it can be. That's where a lot of the cash problem happens, because you're so hyper focused on growth, trying to achieve some growth target, that you don't pay attention to what you're funding, what's available to you, and that's where the cash flow things happen. This is stories have happened where they buy too much inventory, the sales drop off, and they've got 100K in inventory sitting there, and they've either got to pay their supplier or they've, you know, made another deposit and they're not going to get it back because they've already started, and now they've got these expenses and they've basically got $150,000 not in cash, and they got to pay their marketing costs and other things like that, and then the business really falters. So hyper focus on growth can also be a detriment to the business because of a poor lack of cash management. And there's so many different methodologies and tactics and KPIs to try to manage it. But the one that I've seen that seems to work best is something similar to like a profit first methodology, where you're doing a coffee can or an envelope system where you're pre-funding things that you know you need to allocate budget towards. Probably going to be marketing and inventory. Those are going to be the two biggest things for an inventory for an e-commerce business. And determining those things is going to be one, how quickly you want to grow, what capital you have available to you, and then having a system to manage it as far as your bookkeeping, and know that your numbers, that you're not veering off the rails and you know, not within your forecasts and things. So it just depends on the type of, you know, there's a lot of KPIs out there. And one thing I will say about that though is 5 to 7. Don't get more than that. Probably less than that's probably not enough to give you a good picture, but more than that becomes a burdensome time-wise to invest in tracking it and creating them. And then 2, it's too much information. It's your business, e-commerce business is already complex as it is with all the different things going on, dealing with Amazon, the platform, managing your inventory, when to pay people, where to access credit. You've got a lot of things going on, and you just want to be hyper-focused on the things that are really going to move the needle for whatever your business goals are. So 5 to 7 is what I'd say for your KPIs.
Okay. I think that's super helpful. Yeah. When you get too much information, it can almost be a hindrance to your business and your ability to make decisions, because
Right.
you get too much fear of making the wrong decision or seeing one KPI moving the wrong way.
Yep.
What types of recommendations would you make when it comes specifically to cash flow forecasting? I mean, none of us can predict the future. No one knows where sales are going to happen. And being on platforms like Amazon can be nerve wracking because things can, you can get shut down or some crazy things can happen and sales can drop off. So what are your best practices for cash flow forecasting and trying to predict how your business is going to be doing in the future?
Yeah. So this is similar to like the profit first methodology of knowing what's your important buckets, the things you need to that are the core principles of the business that you need to guard. And so you almost like you allocate a budget to what those things are going to be. And if it's, if you're going to have, and when I say net revenue, what I mean by that is your profits after your cost of goods minus your expenses. So your net revenue is, your real revenue is your net profit after your cost of goods, your gross profit there. So that gross profit is income minus cost of goods is your gross profit. So a percentage of that allocate to inventory to marketing. And so one of the things that I'll do is I'll create an Excel sheet. I'll do it by month. I don't think week is really helpful because it can kind of change. So and you get a lot of statements by the month, so it's easier to kind of forecast. So for example, you get your internet bill once a month, you get your phone bill once a month, and then I put on there the dates, and I create an Excel sheet and have one cell for every day, and then I put the expense of that number there, and then I just forecast it against my revenue. So I know I have a specific, let's say I call it a core cost of, this is what I need to keep the lights on. I got to pay my rent. I got to pay my phone bill. I got to pay my internet. I know I need to have $2,000 in profit to cover these costs, right? And then that way kind of establishes your baseline. And then you can start forecasting, hey, if I make X number of dollars, I can take 40% of it and apply to get a new SKU or some new products, or I can increase my marketing budget. And then you just play with different scenarios in your Excel sheet. That's really what I do. I know it's not a what's the word, really techie type of a way where you just plug in and it does all these forecasting things. Honestly, I don't, I wouldn't say I wouldn't trust it, but I want to see it and I want to be able to do it my own way and see what's going to affect if I change this. Oh, this is what happened. If I change this, this is what happened. A lot of these forecasting tools don't allow you that granular of a capability in Excel. And the other thing is Excel, a lot of us have access to people who can build us these different things in Excel so you can see what you're doing. That's another thing. So it's not a thing of that, hey, this type of a system or this platform has the best one. Honestly, Excel. It allows you so much more flexibility and granularity to fit what you need. And then if you're not capable of programming to do it, there's lots of people through our various platforms, Fiverr and things like that, where you can, hey, this is what I want. Can you build this out for me and build it that way? So it's not an easy answer, but that's the way I've always approached that. Every client, when I was doing my CFO services, I built from scratch in Excel their forecasting because every business was so different.
Yeah.
So.
Yeah, I mean, that's true. Every business is completely different, and whether you have a product business or a certain type of product or product seasonality trends, there's always different things that are going to affect your forecast. And
Yeah.
really understanding the business is going to be the most accurate way to build a better forecast going forward. But
Right.
after kind of hearing all of this, and it can be overwhelming, I think, to a lot of Amazon sellers. How do they figure out what they can actually pay themselves and what their profit is going to be? I mean, I think Isaac talked a little bit about how that was kind of a problem to figure out. My first e-commerce business, I had the same problem figuring out what to pay myself. So, how can you figure this out? What are you actually making? Like, that's the whole point of why we're starting these businesses. So,
Yeah, it's unless you have these three accurate reports, you're not really going to know what's left over for you. And again, here's I'll talk more about the profit first methodology again of setting aside a percentage of pay. At least I'm going to pay myself 1% of what that gross margin is for my labors and things. Establish the habit. It seems to create a mind shift in people of, hey, I'm just at 1% now. Because if you just keep putting off and hoping for some payoff someday, one, you don't know if it's ever going to happen. Two, you haven't established the habit that you're not valuing your input and your work in the business. And you're not doing it in a way that's recognizable, that you can't point to. If there's something about being able to, even if it's $1 a week, even if it's $5 a week, that you're hey, I'm worth a lot more than $5. What am I putting all this effort in for? Some future random payday? Would you go to and work for somebody and where they're paying you $5? Oh, but in 2 years you're gonna get a $200,000 payout. Well, is that really worth the 2 years of work to do that? So I'd like that methodology to apply that. But to answer the technical side of the question, it's really a conversation you and your tax advisor should be having, because there's tax implications for how you do it and how you pay yourself. A lot of business owners say, hey, I just want to pay myself whatever's left over. Well, it's a moving target. Let's put it that way. It can change a lot. And so I think a better methodology is set a habit of paying yourself every week, every month, a certain percentage or at least a small amount to recognize your labors that you're putting into the business. And it also gets you to think of valuing what your contribution is to the business and making those assessments as, hey, is this 70 hours a week that I'm putting in here for me? What's my outcome? Am I going to sell the business? Am I going to hold on to it? What's my end game of this? And it shifts the mindset a little bit away from, I'm hoping to sell it. Well, look what happened with COVID. Yes, e-commerce businesses have taken off since then, but we don't know what's the next thing around the corner. Yeah. And yes, you're taking a big risk if you're assuming that that's always going to be there, that somebody's going to want to buy your business if that's what your end game is. So I don't know if it directly answers the question, but I want to shift away from the traditional mindset is, I'm just going to pay myself what's left over. Or whatever's left in the bank account that's obviously a no-go. That's just don't do that.
Yeah, I'll add to
I
that.
advise against that, whatever.
Pay myself whatever's left over, but I'm going to reinvest all of my profits.
Yeah.
Well, when are you ever going to make any money? This is what a lot of Amazon sellers go through. And so I just wanted to add to that. So Jason's been talking about profit first. And for those who, I think he's given a summary. I think you get the idea of what that's about. But if you've never heard of profit first, it's a methodology that was described in a book called Profit First by the author Mike Michalowicz. It's a really great, it's a great book. It's surprisingly not a boring read. He's a great author. So I would recommend anybody who's interested in that, pick that book up. But essentially the overview is, this is a pattern that gets repeated everywhere, not just in e-commerce, but throughout businesses from all time, right? Is you own a sandwich shop, but you just don't have enough money to pay yourself. This is the entrepreneur's problem. And so the point of the book is, listen, if you just keep going at it, hoping it'll be better, maybe if I work a little harder, it's actually not going to give you the result that you want. You actually have to put a system in place to make sure that you got into this business for a reason. And it wasn't to work your butt off and not make any money. So if you want to change that, you actually have to put something in place. And so the profit first methodology is really it's a simplifying thing that you can do, which is essentially take all of your income and twice a month, put that into jars. So you remember, like your grandma's money jars or envelopes or something like that, where they had right on the envelope, this is for whatever, and separate these things out. And make one of those will be for owner's pay or profit. And so you choose a percentage that no matter what, you pay yourself this much. And so that way, no matter what happens, you can at least have something. Hope that makes sense. Definitely highly recommended.
Yeah, I mean, I think that makes sense. I think as entrepreneurs, a lot of the time, we just trust our gut and go with our instincts and see what makes sense. Like, oh, we see money, like let's pay ourselves. But the reality is you need to rely on your advisors and the people that have been there before and know how to manage this to help you make better decisions in areas that maybe aren't your strengths. Well, I think we've talked a lot about the different reports, inventory management and cash flow side. You know, why don't you guys tell our listeners a little bit more about how Summit eCommerce Advisors can help them understand their bookkeeping a little more and help them manage their e-commerce business better?
Sure. So that's what we're here for is, by the way, if you're listening to us and you're thinking, yeah, I need to get on top of this, I just have no idea how, get in touch with us. I'm sure you'll have contact information somewhere if you're watching this. Get in touch. We're happy to just have a conversation. And it doesn't have to be a sales pitch or anything, but just we want to be as helpful as we possibly can and point you in the right direction for you, which may be different for somebody else. And so that's really what we're all about. So how can we help? One, we can have a call with you just to help you figure out what would be best for you. Maybe you're not in a place where you're ready to pay somebody to take over this work for you. Well, if that's the case, there are a host of other options that you might consider. But if you are just too busy, you don't have time for that, and you need to offload this, sure, we can help there too. We do a monthly bookkeeping service where, so as you might expect, we do provide these 3 reports, but our job is we don't ever want to be the people who just say, here you go, here's your reports, enjoy, I'll see you next month. We're really here we want to have calls with you at least once a month to sit down and review your information with you and help you understand what this means. I always go back to Rich Dad, Poor Dad. That was one of the very first books I read that really shifted my mind from like an employee type mindset to like, wait a minute, I need to be out there adding value in this world. I think a lot of people have have read that book. If you haven't, do yourself a favor, pick it up, by Robert Kiyosaki. In that book, he talks over and over about the importance of educating yourself, increasing your financial literacy. And that really is key. So, you can find other sources of information, but if we're working together, we're going to help you. It's not going to be like, you're not going to instantly know everything, but we want to at least be helping you understand this each month, get better and better at knowing how to read these things, what these things are telling you, and then how you can apply that to your business. because everybody's going to be a little bit different. And so we want to be that source of advice, and, you know, whether you're paying us or not, really.
Awesome.
Does that make sense?
Oh yeah, no, I think that's very helpful, and it really explains what you're willing or what you're able to do for a lot of our listeners. If they want to get in contact with you guys, what is the best way to reach either you or Jason?
Sure. Any way that's easy for you. We have a website, summitecommerce.co. You can find information there and place to schedule a call with either one of us. You can email us if you'd like, Isaac@summitecommerce.co. And of course, the spelling ISAAC is the name, is for me. Jason@summitecommerce.co. You can reach, ask any question you want, and we're happy to help.
Awesome. Well, I really appreciate both of you coming on the show and really opening up on your knowledge of this topic. I think everyone can kind of see how knowledgeable you are, and, you know, how much this matters to you and the service that you're providing to your clients. So I really appreciate that.
Absolutely. Thank you for having us.
Thank you guys. Have a great day.